Today, we're looking at an analysis report, Market Meltdown, iRobot Wiped Out, Time to Buy or Buy. It's all about the extreme volatility around iRobot's Chapter 11 filing.
Yeah.
So it's setting up this huge conflict, right? The short-term dead cat bounce trade versus the long-term reality.
Which is zero.
Which is zero, thanks to that cancellation clause.
Right. And the report is pure adrenaline. It's perfectly aimed at those high-risk traders, the ones who live for this kind of chaos.
It's got the energy for sure.
It really does. But look, with something as final as a Chapter 11 filing, the analysis itself has to be, just structurally perfect.
So we should probably dig into how we can make sure that objective rigor is really matching the high-octane speculative side of it. Okay, so let's start there. The first impression. It's just full of this urgent, almost hype-driven language. We've got absolute disaster, wiped out, zero or hero.
Yeah.
All designed to grab that volatility trader.
Well, that's the first issue right there. The report's aggressive, hype-driven tone risks undermining the caution you absolutely need when you're looking at a binary event like Chapter 11.
So the style is creating a conflict.
A huge conflict. It's engaging, no doubt, but the language screams sensational trading opportunity when the real message, the core message, is that these shares are almost certainly going to zero for, 99% of people?
It's a fundamental warning.
It's a huge warning. And that duality, it dilutes the seriousness of the bankruptcy. It takes all the weight out of that killer clause.
That's a really good point about the weight, the authority. Because if the stakes are this high, truly total loss, you can't have the warning just sound like background noise to the trade.
Exactly. You can't. And the way you fix that is by separating the urgency from the hype. The suggestion is to really temper the sensationalism, especially in the intro and, critically, in the warning sections.
So you let the facts do the talking.
Let the legal facts, the buy case, land with their own objective heavy weight.
But I have to ask, if we pull back on that opening energy, do we lose the audience we're trying to attract? Those traders, they want that hook.
And that's the balance. You don't lose the urgency, you just shift its source. The energy shouldn't come from emotional hype. It needs to come from the sheer, the gravity of the legal situation.
Okay.
You save that high-energy, trader-focused language for the part where you're actually breaking down the mechanics of the trade itself, the dead cat bounce.
So give me an example. Instead of opening with, "What is going on, traders? We have an absolute disaster," what's a better way in?
Something that blends that urgency with real analytical clarity. Like, iRobot confirms the market's worst fears, filing for Chapter 11 just shy of the holidays, forcing an immediate reckoning for shareholders.
Okay, I see. It's still urgent, but it establishes the core fact right away, the certainty of what's coming.
That framing immediately feels more authoritative. It's like you're saying, I'm here to explain how bad this is, and then maybe how you could scalp a tiny profit from the chaos. Precisely. And then when you get to that killer clause, you present it with formal clarity, like you're reading from the filing itself. You don't immediately follow it with trading jargon.
Let the reality sink in.
The objective reality has to hit harder than the short-term fantasy. That shift in tone makes the buy case feel totally inevitable.
Okay, that sharpens the whole thing up. Now, moving on from tone, let's talk about the substance of that buy case. The material's good at highlighting the short interest, the bounce potential, but it jumps from the filing announcement right into the trade.
And that's the next big thing. To provide a fully robust analysis, the report is currently focusing too narrowly on the trading mechanics, and it's neglecting the whole operational context that led to the bankruptcy in the first place.
It's missing the why.
It's totally missing the why. We see the debt number, 228 million plus. We see the legal clause that sends the stock to zero.
But there's a gap.
There's a huge analytical gap. The weakness is that the report just expects you to accept that fundamental value is gone. It doesn't earn it. How did Roomba, a household name, get to this point?
Right.
By jumping straight to the technicals, the report leaves that core assertion just hanging there. It feels like a premise, not a conclusion.
And I can see how that hurts credibility, especially with more, sophisticated viewers. They're not just looking for a ticker and a price target.
They want the due diligence. They need to understand the situation is as dire as the report claims before they take on that kind of risk.
So how do you add that context without bogging it down? This is a trading report, not a business school case study.
It has to be surgical. The suggestion here is to integrate a brief summary, we're talking maybe 30, 45 seconds max, of the core strategic failures that led to this.
Okay.
Doing that logically strengthens the whole argument. It makes the bankruptcy feel like a consequence of real-world failure, not just some abstract financial event.
We need sound bites of failure. What are the key points you'd hit?
You have to ground it in market reality. So you could briefly mention things like the intense competitive pressure in that smart home space.
From the low-cost competitors.
Exactly. Especially the fast-moving competition from Asia. Or you could talk about their chronic supply chain and inventory problems that just kept feeding that debt machine and crushing their margins.
So instead of just saying they have $228 million in debt,
You give that debt a story. You could say something like, for years, iRobot struggled with margin pressure from low-cost rivals and a constant inventory overhang. That struggle is why this Chapter 11 filing was an inevitability. The business model failed, not just the balance sheet.
that's powerful. It connects the dots.
It transforms the report from a simple trading prompt into a sharp piece of financial analysis. It provides the intellectual proof that the underlying business is in fact destroyed. And that's the whole reason the trade is so risky.
It gives the whole analysis so much more authority. Okay, let's pivot to the structure of the piece, and specifically, where it places the most important fact in the entire report.
The killer clause.
The killer clause. All issued common stock will be canceled with no recovery for holders.
And this is maybe the biggest opportunity for improvement. The critical legal certainty of that clause is just completely underutilized in the report's current structure. It's treated like background news.
Not like the main event.
Not at all. The weakness is its placement. This single fact defines the entire situation. It's why it's a binary event, why the risk is a 10 out of 10. But right now, it's just another talking point buried in the news section. That structure just kills its power. It completely diminishes its role as the hinge for the entire argument.
If the stock is legally guaranteed to go to zero, that has to be the sun that the rest of the analysis orbits around.
Yes!
The audience needs to feel the gravity of that certainty before you even whisper about a short-term trade.
Absolutely. So the suggestion is to completely restructure the flow. The inevitability of the $0 outcome has to be established first.
Up front.
Up front, using the killer clause as this definitive, non-negotiable premise. That completely reframes the buy case. It becomes this tiny, high-risk deviation from a guaranteed negative outcome. The warning becomes inherent to the structure itself.
Okay, but let me push back on that. If you lead with the guaranteed zero, don't you risk scaring off the very traders you're trying to reach? You might shut them down before you even get to the trade setup.
That's where you create dramatic tension. By leading with it, you're setting the stakes of the gamble. You establish the baseline of guaranteed loss, which makes the short-term volatility play seem like what it is.
A desperate move?
An extremely rare, high-risk, high-IQ opportunity that only exists because of the friction of the bankruptcy process. The current flow is, what? Hype intro, then a mix of news and warnings, then the buy case. It's messy.
So what's the stronger structure?
Much stronger would be urgent, authoritative intro. Then, boom, the hard legal reality, the zero-sum clause. Then, the operational context, why zero is inevitable. And only then do you get to the buy case, presenting it as the exception to the rule. And you finish with a final hard warning.
That flow makes so much more sense. It builds the case logically. But how do you bridge that gap, going from the gravity of the zero-sum reality into the speculative trade without it feeling jarring?
You create a standalone segment for it. Right after the Chapter 11 announcement, you have a short segment, maybe call it the zero-sum reality. That's where the tone shifts to pure objective fact. Force the listener to confront it. Then you use a specific phrase to bridge the two worlds.
Okay, like what kind of phrase?
You frame the buy case as something that exists in spite of the clause. You could transition out of the zero-sum reality segment by saying something like, now knowing the long-term reality is absolute zero, why are professional day traders still glued to the tape?
Ah, I see.
Because, historically, these filings create massive short-term volatility, and the short interest here presents an opportunity for a technical bounce. That link keeps the risk front and center. It reinforces the huge difference between a scalper and an investor who's about to be wiped out.
That structural change is brilliant. It takes the biggest legal negative and turns it into the analysis's biggest structural strength. It makes the whole thing feel more responsible, more authoritative, without losing any of that appeal for its target audience.
It makes the analysis robust and, frankly, resilient to criticism that it was just pumping a suicide trade. You're using the most critical piece of information to define the entire risk profile from the start.
This has been incredibly helpful.